Crypto Hotep here with another market thoughts video. These videos, if you're familiar with the channel, you know that I recorded kind of just a more of an opinionated video. The first one being on Bitcoin. It was more for like those passive investors, maybe the people that aren't so glued in on the charts, aren't so glued in on companies' financial statements, but still want to know what's going on in the industry and the markets and why. But they're more along the passive side. They don't really stick to like price action, but they still want to invest their money in the right things, and they still kind of want to know what's going on. So, with that being said, we will jump into this thought-provoking video. Basically, a review of a very impactful article, I think, from Yahoo Finance that was sent to me this past weekend. Before we begin, none of this is financial advice at all. Please do your due diligence. And one more thing, if you can, please support the channel. Please subscribe, like, comment, share the video. It does help us out, helps me out. And you would be doing me a solid just by supporting the channel, just by doing that, guys. But with that being said, we'll jump right in here. So Yahoo Finance sent me this email, or sent me a notification with their app this past weekend, and it was about key savings and wealth statistics for 2025, how American finances compare. And basically, this article compiles the stats of how Americans are saving, investing, and all around their whole money finances, how it looks from a broad scale. So it uses averages, medians, and it has some startling statistics in here. And the reason why I want to go over this is because I believe that the crux or the foundation of any good investing strategy is a budgeting, and understanding where your money is going and what your money is doing. So this falls definitely in line with that. So as we kind of scroll down here, we are going to pass by a few things because those things don't really bother me that much, or I'm not really interested in them. If you want to, you can take a look at this article. I will copy the URL link in the description just so you can get into this article as well. But let's see this. Okay, so here we go. Here's some of the statistics here. So coming to the savings trend. So the personal savings rate of disposable personal income is only 4.4% as of July 25. Average savings vary by generation, with millennials saving the most money in 2024 and baby boomers saving the least. So with baby boomers saving the least, this does make sense only because of the age of the baby boomers and where they are in life, right? Millennials, which is the most, the average amount saved in 2024 was over $12,000 for millennials. Again, those are people that are born between 1981 and 1996, per this Yahoo Finance article here. So again, very cool stat here. Again, though, but this is an average. Okay, so when we're looking, or when you're reading this Yahoo Finance article, my thought is to look at the median numbers and not to look at the average numbers. And the reason is that average numbers are skewed, and they're skewed based on high earners or high numbers, and also very, very low earners and very, very low numbers. Median gives you somewhat of a realistic picture of that. So as we can see here, the median retirement account balance in the US is $87,000. This is a legitimate number, and this is a very low number with all things considering. So when comparing the average retirement age savings by age, those aged 65 to 74 have the most savings, which makes sense. And those aged 35 and under have the least. So this makes sense. This correlates, I would say. So here's a great example here. So if we look at the retirement savings by age chart here, we have the age, average savings, and then median savings. I would somewhat disregard this column here and just focus on median savings. So anybody 35 to 44, you have a median retirement savings of $45,000. So this could be in a retirement account such as an IRA, 401k, those type of things. Okay. And obviously people 65 to 74 have the most. Their median saving is around $200,000. And if we're being honest, that's even a small number with all things considering. It is the biggest number, but it is a very small number, because when you think about your retirement savings when you're of that age, you want to be somewhere close to 500k and up. So this is a very, very low number here. This is another startling statistic here. The median emergency savings for Americans is $600. According to the 2025 survey by Empower, nearly 2 in 5 Americans, which equates to about 37%, said they couldn't afford an emergency expense over $400, while 21% of those Americans have no emergency savings at all. This is one of the most startling statistics ever. So again, this plays to my previous statement about having a great foundation for your investing. And this isn't, a very popular opinion, but I think you need to have an emergency fund set up, or at least the start of an emergency fund set up, before you really knee-deep dive into investing outside of things like a 401k and such. I think that emergency fund needs to be, again, it doesn't have to be fully funded, but it at least has to start. And the reason is you want to have a good safety net in case something happens, right? It doesn't matter, you don't want to have to dip into your investments to help fund your lifestyle if a tragic incident happens. You would rather have the emergency fund to fall back on so you can keep those investments invested, and so they can keep compounding as they should be. But again, the median, and this is the number we should be focusing on, emergency savings for Americans is only $600. As of right now, especially with inflation and how things are very overpriced right now, $600 is still $600, don't get me wrong, but it only will go so far, especially for an emergency type of event. Nearly 2 out of 5 Americans can't afford an emergency expense over $400, and then double digits have no emergency savings at all. And it is kind of hard, I will say, in this economy. Even saving money is somewhat out of the question for some people as well. Okay. The income and net worth. So the real median household income was $80,000 in 2023, representing a 4% increase from 2022. Okay. And if you're looking at that, you may say that seems pretty good. Well, true. However, you have to remember inflation is also it now is 3%, right? But inflation was higher than that in 2022, 2021, and then also some of 2020 as well. The average American family's net worth was over $1 million in 2022, according to the most recent survey of consumer finances. Again, there's that word again, average. That is highly skewed. That's not a realistic number. The median net worth was $192,700 for the same year. This is more realistic because when you take an account with your net worth are obviously your assets minus your liabilities. One of those assets that is significantly a large chunk of middle class Americans' net worth is their house. So this makes a lot of sense when you couple that in. Some of those individuals may have debt, so you may subtract that from the worth of the house, and so forth and so on. Okay. Wealth distribution in the U.S. Okay. So again, this I do like this as well. So this shows the wealth component and also the income class for each American, where they are with owning that wealth component. So here's what I mean. So if we look at real estate, out of the top 0.1% earners, only 8.4% own real estate. That seems a little bit low to me. But again, the bottom 50% own the most real estate. Why? Because they couple that wealth with the owning of that home. So, and what I mean is, and I'm sorry, let me rephrase that, is the wealth is distributed across 50% of the bottom 50% earners, meaning that most of their wealth is in their house. The top 0.1%, most of their wealth is not in their house. Most of their wealth is in corporate equities in mutual fund shares, i.e., stocks, equities, ETFs, those type of items. So the top 0.1% wealth, 52%, I believe that's the largest number on here, of the top 0.1% income earners, their wealth is in corporate equities and mutual fund shares, stocks, ETFs, mutual funds, those pieces. And then it just goes down. And then that same bottom 50% where real estate was most of their wealth, it's only a staggering 5.3%. Not a lot of wealth is being generated from those corporate equities, those stocks, shares, those type of things. This is also very startling here. So again, when we speak about wealth and distribution wealth, one thing that I want to strive to get my family wealth is we want to exceed our wealth outside of that home, right? We want to make sure that our wealth is built on a strong foundation of Bitcoin, stocks, ETFs, and equities, and then have the house there as a utility. But we don't want, what my vision for my family's wealth is, we don't want the wealth to be so consumed by that one asset, that house. We want it to be consumed by multiple items, multiple streams of income that are also producing as we hold them. Okay, so that's a very startling statistic as well. Average net worth. So average net worth of individuals, and again, I was looking at the median net worth, not the average. So the average net worth of somebody in their 60s is over $400,000. That makes the most sense. It's the highest, right? And then it kind of dwindles down from there, because normally people are still working in their 60s, especially now, and then they've retired by the time they hit 70, so then their net worth has kind of peaked off at the 60 mark. 30s, if you're in your 30s, your median net worth is only 35, a little bit over 35,000, and then in the 40s, that's when your net worth jumps from 35,000 to 125,000. That's pretty nice here. Okay, and then last but not least, there's some savings goals and challenges, if you will, which I believe everybody's facing. So I think there were two that stood out. So that makes total sense. Nearly half of adults describe the cost of living in their area as not very affordable, or not affordable at all. Okay. Nearly half of adults report their income just about matches their expenses, while about 3 in 10 say their monthly expenses exceed their monthly income. So about 30% of Americans. About 40% of Americans say they would cut spending when expenses exceed income, while 26% say they would dip into the savings. And that's where that median savings amount comes into play, why it's such a small amount now, because people are dipping into their savings. And then only 58% of Americans say they know their net worth, while 21% say they do not, and 21% are unsure. I think it is valuable to know your net worth. From a personal perspective, I think it is pretty valuable. It gives you a nice goal, a life goal to go to, and just kind of a report card to see where you are at and how you are doing. But all in all, this article is very insightful. I think you can use this to kind of benchmark how your savings and how some of your investing items are going as well, and how you stack up as also, and what type of numbers to look for when you're comparing your numbers with this number here. So if you guys felt this video was helpful, feel free to like, subscribe, comment, support the channel, guys. Let me know what you think. And again, I'll try to do more of these videos as well. But as always, guys, thank you, and happy trading and investing.